Hello and welcome back to my YouTube channel. So we'll continue with the revision for the April 2025 paper. And today I'll do question 25, and straight away, without wasting so much time, I'll read the question. Jasho, Jivu, and Jiko are in a partnership sharing profits and losses in the ratio of 2 to 1 respectively. The estimate profit or loss for the ended 30th June 2024 was as follows. We have the gross profit all the way to the net profit. So we have gross profit. Then the other income is sale of delivery van proceeds. Then we have expenses. Then we have the net profit. So under additional information, number one, we have said that advertisement expenses include shillings 120,000 spent on acquisition of a neon sign. Number two, general expenses comprise the following: partners India party, staff catering services, embezzlement by cashier. The number three, bad debts represented the general provision made for the year. Number four, legal fees comprise the following: parking fines, setting a dispute with the customer, appeal on a tax assessment. The number five, investment allowances were agreed at shillings 30,000 with the Commission of Domestic Taxes. Required, Roman 1, prepare adjusted taxable profit or loss of the partnership for the year ended 30th June 2024. Roman 2, the allocation of the taxable profit or loss in Roman 1 above to the partners. Yeah. So the first thing we're going to do is to prepare an adjusted taxable profit. So this is a question under public finance and taxation. Yeah, and that's an area that they always test in your business data analytics. So this is whereby you choose between a question on taxation and audit. So I'll start straight away. So we look at the adjusted, prepare adjusted taxable profit or loss for the partnership. Yeah. So the name of the partnership, so it's Jasho, Jivu, and Jiko. So I think maybe that partnership was supposed to be Jajiji. Yeah. So you can say Jajiji Partner Enterprises. Yeah. Jajiji Enterprises. Or you can just say Jasho, Jivo, and Jiko partnership. Nobody will penalize you. Yeah. So Jajiji Enterprises. Sorry for that. Enterprises. Jajiji Enterprises. Adjusted taxable profit. Adjusted taxable profit for the year ended for the year ended 30th June 2024. 30th June 2024. Okay, so I'll create the bottom border. So once you create the bottom border, I think all is aligned. So let me bold that. Yeah, so the shillings were not in thousands, so I won't include that. So we always start with the reported net profit. Reported net profit. Yeah, so what was the reported net profit? Reported net profit, yeah, you see here, the examiner gave you the gross and the and uh, and the net profit. Yeah, so that was just to confuse you. Yeah, so we'll take the net profit. So this is what we'll adjust. Yeah, so always when it comes to taxation, you have the reported net profit, then you adjust by adding back the disallowable expenses. So I'll add back the disallowable expenses. So all expenses that are disallowable, you add them back. You add them back. Oh, sorry, we continue. So we have the disallowable expenses. So you add back the disallowable expenses. Yeah, so the disallowable expenses, so I'll underline that by putting the bottom order. Yeah, so we have the disallowable. So you always add back the disallowable expenses. Yeah, when you're adjusting an account of partnership, you add back the disallowable expenses. So we'll look at the disallowable expenses. So these are the expenses. So you start with the advertisement and you ask yourself uh, whether there was any adjustment on advertisement. So number one, we have additional information that say advertisement expenses include shillings 120,000 spent on acquisition of a neon sign. So the neon sign, that's a disallowable expense. So just come and say neon sign and you add it back. Huh? Yeah, neon sign, that's disallowable. So you'll add it back. So it was 120,000. It was 120,000. So I'll go to number two, depreciation. Yeah, depreciation. Depreciation, amortization, impairment. All those items are disallowable. That's a disallowable expense. So you add it back. You add it back. You add it back. So the depreciation and the two cousins, the impairment losses, those are disallowable expenses. Those are disallowable expenses. So we'll add it back. So just come here and copy depreciation. Then you add it back. Yeah. Yeah. So I've said all impairment, depreciation, and amortization, all those are disallowable expenses. So immediately you see it, you add it back. So we have rent and rates. Yeah. And was there any adjustment to rent and rate on the additional information? No, there was no specification, yeah? Yeah, so we'll take this as allowable because rent and rates must be related to the business because they didn't specify. It was not for personal rent or expense. And because they're not specific and additional information, then we don't adjust it. We don't adjust it. You leave it at that point, yeah. So we go to general expenses. Was there clarification on general expenses and additional information? Let me see. Yeah, number two, you can see, yeah, general expenses comprise the following. So we have partners and year party. Partners and year party. That's a disallowable expense because the party relates to the partners. It's not specific to the business. So that expense is disallowable. So just come and copy that. Partners and years party. Then you enter. You pick that amount. The number two is the staff catering services. They're very specific. It's the staff catering services. So that's related directly to the business. So that's an allowable expense. So we won't add it back. It's allowable. Then we have the embezzlement by cashier. Yeah, so embezzlement by cashier is a disallowable expense. Yeah, yeah, embezzlement is a disallowable expense. So we'll also add that back. Yeah, it's a disallowable expense. Yeah, so we go to the next expense. We are done. We have value added tax, VAT. Yeah, so is VAT allowable or disallowable? VAT, is it allowable or disallowable? That's a VAT, value added tax. So I say that allowable and disallowable. Disallowables are those that does not relate in any way to the business. So the VAT, is it allowable or disallowable? So VAT here, the value added tax, we assume that these people were in a business whereby, yeah, they were dealing with items of where we pay value added tax. Yeah, it's a partnership. Yeah, because they're not specific, they've not clarified. So we leave it at that point. We don't take VAT as disallowable. So that's an allowable expense. Yeah. So bad debts. Yeah, there was information on bad debts. Number 3, we are told that bad debts represent the general provision made for the year. So any general provision for bad debts is a disallowable expense. If it was specific provision, then it will be allowable. But general is a disallowable expense. Yeah, so they have specified that this was a general. So general is disallowable. Then you have purchase of furniture. Is there any information touching on that? So purchase of furniture. Furniture is a capital allowance item, yeah? So yeah, it's purchase of furniture is an allowable. Yeah, purchase of furniture, that is a disallowable expense because it's an item of capital allowance. So purchase of furniture will be, that is also disallowable expense when you purchase the furniture. Yeah, and any other item, you see, any other item of any capital allowance item, yeah, when it's provided under expense, they have deducted it, then you add it back. It's a disallowable. Yeah, purchase of machinery, purchase of furniture, you add them back. That's disallowable. Then salaries and wages, salaries and wages. So was there any information here and additional information talking about salaries and wages so that we can know what is related to the business or that one which is disallowable? Yeah, so there was no clarification. So you leave it at that. Yeah, you assume that salaries and wages, because they have not specified any additional information, these were being paid to those who are working in the partnership. Yeah, the staff. Salary and wages here, it was for the staff. So that's an allowable expense. Then we go to legal fees. Yeah, so there was a clarification. Number 4 on legal fees. Yeah, so legal fees comprise the following. So parking fines, shillings 130,000. So parking fines, any fine in a business, that's disallowable because it does not relate to the business you are carrying. Yeah, yeah. So parking fines is a disallowable. So you add it back for 130. Then settling a dispute with a customer. Yeah, the word here is the dispute being settled with a customer of the customer of the partnership. So that's an allowable. Yeah. Then you have appeal on a tax assessment. Yeah. Yeah. So any appeal on tax, whether it's VAT or what, any appeal is a disallowable expense. Yeah. So just come in and add it back. Appeal. Then you add it back. It's to 10, so that's disallowable. And then we continue. We were on legal fees. Then goodwill written off. Yeah, goodwill written off. Is goodwill written off allowable or disallowable? Goodwill relates to the business. Yeah. Yeah, we assume that this goodwill maybe was on. Yeah, the goodwill was on the business. So it relates directly to the affairs of the business. Yeah. But you see, this goodwill was written off. So it was a goodwill that was written off. So how will we classify it? Yeah. Yeah. So goodwill, any goodwill created in the acquisition, structured as an asset sale, is is a tax deductible. Yeah. So it means that it is allowable for tax purposes. So now that we are told that this goodwill was written off, then the fact that the goodwill was written off, then we'll assume that now that goodwill is allowable. So I won't include it. Yeah, then we have interest on capital. Yeah, so both for Jasho and Jivu. So is interest on capital disallowable or allowable? Because it's an expense. Yeah. Is it allowable or disallowable? allowable. Mhm. Mhm. Interest on capital, is it allowable or disallowable? Yeah, so the interest on partner's capital is allowable, yeah? Yeah, and in some scenarios, allowable to a maximum or rate of 12% per annum. Yeah, so I don't know what was the interest because I'll be able to know that when I've prepared the distribution schedule, yeah? Yeah. Yeah, so always interest on capital is an allowable expense. So any interest paid by taxpayer on capital borrowed for the purpose of taxpayer's business or profession is tax deductible without any limit. Yeah. So we assume that the interest on capital is allowable. Yeah. So that was those are the adjustments. I'm done with that. Then is there anything that I've left out? Huh? Yeah, because as you adjust the expense, I told you start with the first expense as you go down and whether the additional information specifies. Yeah, specify where you have to include it. So, yeah, so I think we are done with that. So we are done with that. So what do you do next? You less the non-taxable income. Yeah, so you less the non-taxable income. So I'll less the non-taxable income. Just say non-taxable income. Yeah, you just have to know that you have to less that. Yeah, you don't have to write there less non-taxable income. So just write non-taxable income. So is there any income apart from the gross profit of the business? Bottom board. Yeah, so where do you get this information? So that you always come below the gross profit. You have sale of delivery van proceed. So these are proceed from the sale of what? A capital asset, the capital asset, yeah. Yeah, so any capital gain on sale of assets is non-taxable. Yeah, anything you gain by sale of assets, it is non-taxable. Yeah, so you'll add back this sale of, sorry, you subtract because it's non-taxable. Yeah, non-taxable, you subtract. Yeah, so you'll subtract that sale of delivery van. The reason why we subtract it because it's a sale of an asset. Yeah, any gain on sale of asset is you subtract that. Yeah, you subtract that. Yeah, that's not. So I'll say equals to negative. Then I'll put that amount 1.4. Subtract that. Then the other thing is the capital allowance. Yeah, so we'll also less the capital allowance. We less the capital allowance. So you say capital allowance, and we are told that under additional information number. What's the number? The additional information number what? It was number 5. Investment allowances were agreed at 380,000. So those are the capital allowances, yeah? So we'll also subtract that because they are already calculated, yeah? Yeah, if they're not calculated for you, you'll have to calculate manually, yeah, if there's no agreement, yeah? Yeah, so you less that 380,000. So once you less that, those are the only adjustments that you'll have to do. Yeah, so we'll now have the adjusted taxable income. Yeah, because this was the only business being carried out by this partnership. So we just say the adjusted business income. So you can say adjusted. Yeah, so adjusted taxable income. Yeah, so you love that. So yeah, so we'll adjust. So just sum all this. Then you go to home, then you come here and sum. Yeah, so the adjusted taxable income now is 1.655. Yeah, 1.655. So that's what you're supposed to do for the part A. Prepare adjusted taxable profit or loss for the partnership for the year ended 30th June 2024. And you'll get your all 18 marks. So let me see. 1, 2, 3, 4, 5, 6, 7, 8, 9. 10, 11, 12. Yeah. So in these questions, always, if you want to pass your exams, don't avoid such a question because this question, they will give you 2 marks for every entry. Yeah, so like in this case, you get the 9 entries correctly. You have to not, you don't have to get the adjusted taxable income correct, but or for the 9 entries that you'll get the full 18 marks. Yeah, you see. Yeah, these questions on tax, like these questions on tax, they look at the entry. Do you know what you are supposed to do? Do you know that neon sign is a disallowable expense? You get your 2 marks. Yeah. So here, any 9 entries correct, you get your full mark. So always go for such questions. Yeah, the same questions are there on financial reporting. Yeah, so don't avoid such questions. Yeah, yeah, because you will get your 18 marks. You don't have to get the adjusted taxable income correctly. Yeah, so top border. Mhm. Then the allocation of the taxable profit or loss in one above. So we have a profit, so it's a taxable profit. There was no loss, yeah. So they want us to prepare what you call the distribution schedule. The distribution schedule. So I'll prepare that, and that for that you'll get 2 marks, yeah. Yeah, so you can't miss that marks if you have done that the other part correctly. Yeah. So distribution schedule. Let me prepare it. Distribution schedule. Yeah, so we had do and do. So we have the first partner was Jasho. Mhm. Jivu and Jiko and Jiko. Mhm. Yeah, so how do you prepare the schedule? We start with the salaries. Was there anywhere where there was specific that there was salaries which was being paid to the partners? Huh? Yeah. Was there a schedule for salaries of each of the partners? No, there was no salaries. Yeah, so you'll avoid that. Then was there interest on capital? Yeah, there was interest on capital. So I'll start with the interest on capital. Yeah, so we are supposed to start with the salary. If there was specific, yeah, they told you that maybe Jico was being paid this much on salary. Yeah, on that partnership. So interest on capital, just show what was the interest. So you have interest on capital here, just show add 80,000. So just pick, just equals to 80,000. Then Jivu, add 140,000. Then there was no interest on capital for who? For Jico. So Jico maybe was a dormant partner, yeah? Yeah, he was a dormant partner. It didn't contribute anything, yeah. So he was just a dormant partner. Yeah, so after interest on capital, we will check whether there was interest on drawings. So was there interest on drawing? You deduct that, huh? Yeah, so there was no interest on drawing, so we won't look at it. So the other thing that we look now is the profit share. Yeah, the profit share, because that's what we are given. Profit share. And we can't calculate this before we get this. Yeah, sorry, I was supposed to have totals here. Sorry for that mismatch. Huh? Yeah, so total means I'll add all this, sum that, there to get that number. So profit share, we'll leave this blank so that we check out the business income, the total business income. Yeah, so what is the business income? Is that the adjusted taxable income? Is the adjusted taxable income? So you'll say equals to this, yeah? Yeah, so that's the total business income. So you know that interest on capital plus profit share is what will give us the business income. Therefore, can we get the total profit? Yeah, before we share it. So the total profit will be equals to the total business income minus the interest on capital. Yeah, because that's what we deduct from the business income. Therefore, the profit share will be 1.435 thousand. Yeah. Therefore, the profit share now will come here and say equals to, the ratio was 2 to 1 to 1. So that's 2 plus 1, 3. 3 plus 1, 4. So it means that for Jasho, he will have 2 out of 4. Yeah, he will share 2 out of 4. So you take 2 out of 4 times this. Mhm. Yeah, it will, Joshua will have that. Then Jivu was 1, so it will be 1 over 4 times this amount here. Yeah, so even Jiko was 1 over 4. So it will be this amount, but you can as well just say equals to, you take this, you subtract this, because what remain now will remain for Jiko as the share. Yeah, it's still 358, 750. Therefore, the business income will sum all that, auto sum that. Yeah, and once you are done with that, I'll just drag for for that. Yeah, you can see it will give me 358. So when you add this plus this plus this, will still take you back to 1655. So that's how you prepare distribution schedule. Yeah, the allocation of the taxable profit loss in one or above the partner. So what they needed was the allocation. Yeah, to show how, to prepare distribution schedule and show them how what will each partner pay. Yeah, so this question required you to work up to this point in time. But you go, if you're told that tax payable by each partner, let me add that part. So with this, you'll get your 2 marks, yeah? But let me calculate the tax payable by each partner, which was not part of this question. Because they have just said that the allocation of the taxable profit or loss in the above partners, yeah. So, but let me go to an extent of calculating the tax payable by each partner. So we'll have Jiko, Jasho, sorry. And you can just drag to save on time to copy those 3 names. Yeah, so how do we share this? Yeah, for partnership, we'll use the schedule for the mostly for the employment income, yeah, for the individual, because this is the tax that you'll charge on an individual. And you know the rates are always given. So for the first, let me say first, first it's always 288,000, yeah, times uh, times 10%, yeah. So it was always 288,000, 288,000. Yeah, that's annually times 10%. Yeah. Sorry. I was supposed to say equals to. Let me extend that. Yeah, so it's equal to 288,000 times, let me say yes. Yeah, so that's always applicable to all, yeah, for the first. So you just copy this, even Jivu will be charged 28,800 for the first part, and even Jiko for the first part, that way. Yeah, so second, for the second, it will be 100,000 times 25, because the difference, it was 388, the range from 288,000 to 388,000. So the difference, which is 100,000, is what we charge, Yeah, the difference, which is 100,000, is what we charge. So it is always times 25%. It's 25%. Then you just say yes. Yeah, then the same value will also appear for this other side. Yeah. We drag that. Sorry. We delete that. Yeah. Yeah. Then now for the excess, the excess, the excess. Sorry. Yeah, excess now. Yeah, so what will be the excess tax? Because you can be asked the tax payable by each partner. Yeah. So the excess now, you'll take this 797. Yeah, because that's what the business income for Jasho. So you take that, you subtract how much? You subtract 388,000 from that, yeah? Yeah, because what we have calculated up there, we have taxed 388,000. So that's what you do. Yeah, those are the rates. Yeah. So all this information will be given in your exam paper. Yeah, I didn't give it here because in this question, we were not supposed to calculate tax payable, but I find it so important that we just calculate. So the excess will be that, but this excess value, you always multiply it by 30% to get the tax, yeah? Yeah, so you take the business income minus 388 to get the excess. So the excess is what you'll charge 30% as now the last part, Yeah, charge 30%, then you enter. So I'll do the same. to this. This also, we had a business income of 498,750. You subtract 388,000. Huh? Yeah, you subtract 388,000. Sorry. Then you multiply that by 30%. By 30%. Yeah, so we'll have that. Then you'll also do the same for the last one. Yeah, his business income is this amount. You subtract the 388,000. Yeah, you see, it's even more than. Yeah, his business income is less. This was a dormant partner. Yeah? So it's like he was not getting anything. Yeah? Yeah, so once you do that, let me also multiply by 30%. Uh, Sorry, let me skip that. Yeah. Yeah, so this one for the first tax. So you can see we already we have 358. Uh, sorry. So the excess will be 358. Yeah, so it's like we only had 358, but we always have 318. So it has been covered up here. Yeah, yeah. So it means that here we'll just have zero. We'll have that zero. Therefore, the total tax, the gross tax paid by these three partners, if you are asked, you just sum. You just sum all this. You sum all this and say auto sum. Then you drag. Then you drag that. Okay. Yeah, so these are the tax paid. If your examiner asks you about tax paid. So that's how you're supposed to do that part of that question. Yeah, and you get your 20 marks. So until next time, if you are on this video for the first time, please take a minute, subscribe. Let's get to 1,000 subscribers. Also like the video, share the video, comment, your comments on the comment section. Yeah, so that we can be able to grow this channel. So my intake is ongoing. My intake for the August sitting is ongoing, so you can reach me through my number on my YouTube bio. So thank you so much and have a blessed morning, evening, afternoon, or a blessed night wherever you are watching from. Thank you so much and have a blessed day wherever you are.